Okay, so the market is absolutely ripping right now, but who's really in the driver's seat? We got our hands on a super deep technical analysis that screened all the top market movers, and we are going to break down exactly what it found. The leaders, the risks, and of course, a potential game plan. Let's dive in. I mean, this is the big question for any trader, right? You've got thousands of stocks out there. How in the world do you cut through all that noise and find the real all-stars? Well, that's exactly what this analysis was designed to do, and we're about to walk through the results right now. Yep, we are breaking down a really comprehensive technical screen of the market's top 20 performers. And look, this isn't about gut feelings or opinions. This is about what the hard data, what the technical indicators are screaming at us. All right, let's kick things off with Act 1, the market's bullish verdict. Because, before you pick a horse, you got to know which way the race is running. So, first things first, what's the overall market telling us? And really, the best way to get a read on the market's health is to look at the major indexes. Think of it like taking the market's temperature before you decide what to wear for the day. And the verdict? Oh yeah, the market is running hot. The S&P 500, that's your SPY, is up a very, very strong 15%. But the real story here is in tech. The Nasdaq 100, the QQQ, is just soaring, up over 22%. That gap between them, that tells you everything you need to know. This is a powerful tech-fueled rally. And hey, this momentum isn't just in a handful of names. The analysis screened 20 of the market's top dogs, and an absolutely incredible 90% of them, that's 18 out of 20, were flashing strong uptrend signals. This isn't just a rally, folks. This is a powerful consensus. So the big takeaway from Act 1 is this. The market is sending a crystal clear bullish signal. The tide is rising, and it's being lifted primarily by technology. Now, let's meet the captains of this ship. And that brings us to Act 2, where we zoom right in on the specific stocks that aren't just tagging along for the ride. They are actively leading this thing. These are the momentum all-stars. Leading the pack, no surprise here, is NVIDIA. The analysis actually calls it the technical powerhouse. And trust me, when you see this data, you'll understand exactly why. Its chart is just a textbook example of pure strength. Okay, let's unpack this. First off, a nearly 78% gain in just 6 months? That's just staggering. Then you've got that positive MACD signal, which tells us there's some serious power behind that move. But for me, the most telling stat on this whole slide is the volume. It's trading at over 5 times its average. Look, that's not you and me buying a few shares. That is a giant neon sign flashing, massive institutional buying. All right, next up, let's look at another semiconductor giant, AMD, which the report points to as the growth champion. And if you thought NVIDIA was impressive, you might want to buckle up for this one. Just look at that number, a nearly 160% gain in 6 months. That's not just growth, that's absolutely explosive momentum. This is the kind of wild performance that defines a bull market leader. So the trend is rated very strong, obviously. But the most stunning number here has to be its price position. It's trading over 83% above its own recent average price. To put that into perspective, it's like the stock has completely unchained itself from its own history. It's not just winning the race, it's practically lapping the entire field. Okay, now for our third all-star, which isn't a single stock, but, well, it's an entirely different kind of beast. We're talking about TQQ, which the analysis flags as the high-risk, high-reward daredevil of the momentum world. So what in the world is a leveraged ETF? Well, it's basically designed to multiply the daily returns of an index. In this case, it's shooting for 3 times the return of the QQQ. Now, the crucial thing to understand is that it amplifies everything, both the wins and the losses. It's an incredibly powerful tool, but like the source material points out, this is strictly for experienced traders who know what they're doing. And that brings us nicely to Act 3, heeding the warning signs. Because, as any trader knows, markets do not go up in a straight line forever. Amidst all this incredible strength, the analysis also flags some pretty critical risks that we absolutely need to pay attention to. One of the biggest risks is what traders call overbought conditions. The best way to think about it is like a sprinter who has been running flat out for a really long time. Yeah, they're still in the lead, but they're getting winded, They might need to slow down and catch their breath pretty soon. And look, this isn't just 1 or 2 stocks getting tired. as you can see right here, a whole host of these market leaders, NVIDIA, Palantir, even Apple, they are all pushing the absolute upper limits of their recent price ranges. When you see so many top stocks this stretched, all at the same time, it's a pretty strong signal that the market itself might need to take a breather. The report also highlights another risk, and it quotes its own analysis of Tesla here. While the price has been looking really strong, a key momentum indicator is actually starting to flash a little warning sign, suggesting a potential loss of steam. This slide shows the concept perfectly. On the left, you've got NVIDIA. The price is going up, and the momentum indicator is going up right along with it. See, they're in sync. That's healthy. Now look at Tesla on the right. The price is still high, sure, but notice how the momentum indicator is actually falling? This is what's known as a bearish divergence, and it's a classic warning sign for traders. It suggests that even though the stock price is holding up, the conviction, the power behind the move, might be fading. So, okay, we have a strong market, but we also have some clear warning signs. What's the takeaway here? What do you do with this information? Well, Act 4 lays out a potential game plan, and it breaks it down for different types of traders. The report basically outlines two distinct paths. On one hand, for the aggressive short-term traders out there, the focus is on the highest momentum names, riding that wave with stocks like NVIDIA and AMD while it's still strong. On the other hand, for position traders who have a longer time horizon, it suggests focusing on the fundamentally solid companies and maybe, just maybe, waiting for a little pullback to find a better entry point. But, and this is a big but, no matter what your approach is, the analysis stresses that one thing is completely non-negotiable: risk management. These three rules right here, this is the foundation. You have to control your position size. Always define your exit point with a stop loss before you even enter the trade, and have a plan to take profits along the way. Honestly, this is what separates the pros from the amateurs. So there you have it. The market is in a powerful uptrend. It's being led by a group of absolute technical all-stars, but there are definitely warning signs that things are getting a little stretched. The data is all on the table. So the big question we'll leave you with is this: momentum is strong. How are you going to play it?